Oh, hi. We just finished our spring rent and vacancy survey a few days ago, and we came up with a lot of very interesting trends, which I'm going to breeze through pretty quickly in this video to give you an overview of what's happening in the Puget Sound apartment market. First, when you look at vacancies, we track vacancies a couple ways, the market vacancy rate as well as the gross vacancy rate. The market vacancy rate excludes all of the new construction that's in initial lease up. In the region right now, the market vacancy rate is 3.8%. It's come down pretty significantly over the last couple of years. The gross vacancy rate has also come down from 5.5% to 5.2%. So these are pretty significant drops in the vacancy rate. This shows the trend over the last dozen years or so, and you can see the vacancy rate has dipped below 4% only a few other times in the last dozen years. We can go back even further if we look at the Tri-County market, which is just King, Pierce, and Snohomish counties. This next graph shows the trend for the Tri-County market going back over the last 32 years. You can see that the vacancy rate has been lower than it is currently only 3 times. That's 3 times out of 66 surveys in 32 years. That's pretty dramatic. That shows an awful lot of strength in our region's apartment rental market right now, particularly in light of the fact that in the last 12 months, developers have opened about 7,000 new rental units. That's a lot of units. In fact, that's the most number of units that have opened up in any calendar year in the last 20 plus years. And there's more on the way. But anyway, this is a great way to prepare for all of the new units that will be hitting the market in the next 3 to 5 years. We're starting from an awfully good base on vacancy. Now, there's a relationship between vacancy and rents. As vacancies go down, rents go up. Rents have gone up 5.5% in the last 12 months. That's pretty significant. Now, some of that increase is due to the addition of new units in the market, and new units invariably rent for more than existing product. If you back out the new units, then rents went up 3.7% in the last 12 months. That's still a very significant rate of rent increase. I mentioned that there is a relationship between rents and vacancies, and let's just take a look at it. This graph looks a little convoluted, but the left scale shows vacancy rates over time, and the right scale shows rent increases over time. You can see that when vacancies get down to 4% or even lower, then rents start to climb in the 6 to 8% range. That suggests that because of where vacancies are right now, there's a lot more rent growth potential in the market. And managers are basically confirming that. They're anticipating to raise rents about 3% in the next 6 months alone. So that would be, if you annualize that, about a 6% a year rate of rent increase. Now, when vacancies go up, the rate of rent growth goes down. And if vacancies get up into the 7% range, you see that you either have zero rent growth or even negative rent growth or rent loss at that point. The issue that investors are really curious about now is, well, what's going to be the impact of all this new construction? We've talked about that in a number of videos recently, so I won't go into a lot of detail here. But basically, developers are telling us that they plan to open about 34,000 units over the next 5 years. Now, certainly not all that's going to happen. Some of it's going to get pushed back or even shelved. Construction costs are going up. Maybe the budget numbers just aren't going to work for some developments in the next few years. And so they may wind up sort of coming off of this total. However, there are already 15,000 of the 34 units are under construction or have been completed just in the last couple of months. And there's another 5,000 units that developers are expecting to start construction on by the end of June in the next 3 months. And so that 20,000 units or so is a pretty big chunk of the total. So we're still going to be looking at very dramatic development activity in the next few years. And that will have an impact on vacancies and therefore rent growth, at least in the near term. The other thing it'll have an impact on is rent incentives or concessions. Right now, very few properties offer rent incentives, only about 20% of the properties in the market. As all this new construction opens up, they will certainly be offering incentives, and that will drive the existing market to have to compete by offering incentives as well. And so that number will go up. The amount of incentives right now is pretty low, but that number will also go up. Right now, we're looking at, on average, less than $500 as a rent incentive. Now, new construction and lease up, they're probably in the free month range, which you're looking at $1,200, $1,500, $1,700 as an incentive to get through the initial lease up. So that's pretty normal. However, there is one positive aspect about all this new construction that is going to have an impact on everybody in the market. Parking rates, which have been going up over the last couple of years, are going to go up even more. Between 2000 and 2011, the typical new property built in the in-city Seattle market had 1.3 parking spaces per unit. Between 2013 and 2016, at least for the properties where we have preliminary information, it looks like that parking ratio is going down below 1, probably to 0.8 parking spaces per unit. So parking is going to become more scarce, and that will drive up parking rates over time. So you can look at the complete article on our website. The article is called Hotter Than a 787's Lithium Battery, and it's at www.duprescott.com. In addition to, there's more information in the article about some of the submarket trends on rents and vacancies that we think you'll find interesting. We also have started to put up a slideshow so that you can go through these charts sort of in full size and see them in a lot of detail. I hope that you enjoyed this video and that you'll come back next week for another weekly apartment update.